Ladies and gentlemen, good day and welcome to the Puravankata Limited's Q1 FY2024 earnings conference call hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator pressing star then 0 on your touchtone phone. Please note this conference is being recorded. I would now like to hand the conference over to Mr. Samar Sarda from Axis Capital Limited. Thank you and over to you, sir.
Thanks, Carol. Good evening once again to everybody and welcome again to Puravankata post-results conference call. As always, we have the senior management with us, led by Abhishek Kapoor, the ED and Chief Executive Officer, Vishnu Murthy, Senior Vice President of Risk and Control, and Neeraj Gautam, Executive Vice President Finance. Before I hand over the call to management, Abhishek, let me congratulate you and your team for crossing a really good quarter on pre-sales, cost more than 11 billion rupees. OCF has been good, and we have a minor reduction in gross debt as well. So, with that positive note, handing it over to management for the initial comments.
Thank you, Samar. Good evening, ladies and gentlemen. Welcome to Puravankata Limited's earnings call for the first quarter of FY2024. I am Neeraj Gautam, the President Finance of Puravankata Limited. Thank you for joining us today. We are pleased to present our financial results for the quarter ending June 30, 2023. The results, along with comprehensive presentation, have already been uploaded to the stock exchanges for a review. Today, we will provide insights into our outlook and key initiatives. Before we dive into our company's specific performance, it is important to mention the broader economic landscape, both on a global and national level. This will set the context in terms of the underlying demand that has consistently propelled our sales performance. Moreover, this understanding will highlight the potential for future growth. The world economy is getting better, especially in places like India. India's economy is doing even better than expected. The International Monetary Fund has raised its prediction for India's economic growth to 6.1% for 2023, which is higher than the earlier prediction of 5.9%. This is happening because of the people in India are investing more money within the country, and the economy got a boost from a strong growth in the last part of last financial year as well. Many good things are helping India's economy grow. Also, technology, digital changes are happening, and new buildings and roads are being built. People in India are buying more things, and the country is handling global challenges well. Even the property market is doing great, especially for buying and selling houses. In big cities like Bengaluru, a lot of young people are coming because of the job opportunities in technology and other industries. This has caused more people to want houses, which is increasing house price and the rent cost. Renting a place to live in Bangalore is becoming expensive, similar to how it is in Mumbai. Because of this, many people are thinking it's better to buy a house instead of paying high rent. This is making the property market in Bangalore even stronger than other parts of the country as well. Interestingly, Puravankata's operational performance quarter on quarter is a testimony to this growing trend. On that note, let's dive into operational performance for the period. For our operational standpoint, we have achieved the highest ever sales value of INR 1,126 crore in any quarter, the highest ever first quarter of any financial year since inception, up by 119% compared to 513 crore in Q1 FY2023. Out of total sales, INR 715 crore is attributed to Puravankata brand, INR 215 crore to Provident brand, and INR 196 crore to Purva Land brand. Moving to the launches for the quarter, we introduced the Purva Ragam for Purva Land in Chennai. There is noteworthy 181% year-on-year increase in the sales value of Purva Land in this quarter. Our collection swells to 696 crore, representing 52% year-on-year increase. Average price realization to increase by 11% to INR 8,277 rupees per square feet during Q1 FY2024 from 7,406 rupees per square feet in Q1 FY2023. We have an impressive and robust launch pipeline of approximately 15 million square feet. ensuring a steady flow of new projects in coming period. Non-Bangalore projects now account for 46% of the share of ongoing and 65% of launch pipeline. On division basis, Provident accounts for 52% of our launch pipeline, in line with market trends and growth group's strategy. Our net debt stood at 2,119 crores in Q1 FY2024. Gross debt has been reduced by 45 crore from last quarter and net debt by 89 crore. Further, it is worth noting that our debt per square feet of building is declined from 1,277 to INR 1,008 per square feet in Q1 FY24, showcasing our efficient capital utilization. As of June 30th, 2023, the balance receivable of approximately 3,052 crore from sold units covers around 74% of our remaining costs needed to complete the inventory open for sale. Furthermore, we have a cash flow visibility of rupees 6,730 crore in next 3 to 4 years. Finally, turning to our financial performance, Q1 FY24, our revenue from projects grew by 50% year-on-year to rupees 323 crore. The EBITDA for Q1 FY24 was INR 75 crore, which is 22% EBITDA margin. The PAT for Q1 FY24 was negative INR 17 crore against INR 35 crore in Q1 FY23. I would like to bring to your notice that under AS 115, the revenue recognition is now acknowledged only upon project completion and on delivery of a unit, rather than gradually throughout the project execution. This alteration in revenue recognition timing has led to notable disparities in our periodic financial outcome, as it is evident from quarter performance. To conclude my opening remarks, I would like to reiterate that Puravankata is aligned with the prevailing nationwide expensive trend, especially notable with the real estate sector. We are well positioned to leverage this growth surge through our healthy launch pipeline, which has generated significant customer interest and appreciation. While adhering to financial discipline, we maintain an unwavering commitment to timely and exemplary execution. As always, we remain committed to delivering value to our stakeholders. Thank you for your attention. Now, I will open for a floor for the question, and me and my colleagues, Mr. Sheikh Kapoor, Mr. Vishnu Murthy, are here to answer all your questions and clarification and take your feedback. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. I'd like to remind all participants present in this conference, if you have a question, please press star, then 1 on your touchtone telephone. First question is from the line of Vasant Bhavaskar from Investmentors Securities. Please go ahead.
Hello.
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 Yeah, Vasant, we can hear you.
Good evening.
Good evening.
गुड इवनिंग जी. मुझे ये पूछना था कि इस मतलब ईयर का कोई डिविडेंड वगैरह हुआ है कुछ अपना?
वैसे अभी डिविडेंड की कोई बात नहीं हुई है. जैसा कि आपने देखा होगा हमारा बोर्ड मीटिंग का अपडेट, तो अभी कोई डिविडेंड का बात नहीं हुआ है, क्योंकि हम जैसे जैसे डिलीवर करेंगे, जब प्रॉफिट्स दिखाएंगे तभी डिविडेंड की बात होगी. तो आज की डेट में डिविडेंड की कोई बात नहीं है.
अच्छा, जो लास्ट ईयर जो हमने 5 रुपये डिविडेंड डिक्लेयर किया था, वो कुछ यही टाइम सिनेरियो में किया था ना, मतलब यही कुछ अगस्त या सितंबर के आसपास ऐसा कुछ था?
लास्ट ईयर किया था हमने, लेकिन इस साल और इस बोर्ड मीटिंग में बोर्ड ने फाइनेंशियल रिजल्ट को कंसीडर करते हुए कुछ डिसीजन नहीं हुआ है. एज द क्वार्टर गोज बाय, जैसे हमारा प्रॉफिट होता है रिस्पेक्टिव क्वार्टर में इस विषय में डिसीजन लिया जाएगा. अभी जैसा कि हमने बताया कि ये ग्रोथ फेज है ना, हम लोग ग्रोथ करने के पोजीशन में है, एंड देन बोर्ड हैज रिकमेंडेड टू रिमेन इंटरेस्टेड इन द बिजनेस रादर देन टेकिंग आउट प्रॉफिट इन द फॉर्म ऑफ डिविडेंड.
अच्छा, मतलब ये फर्स्ट क्वार्टर का ही रिजल्ट अभी मतलब आगे कुछ क्वार्टर में इनकम डिविडेंड की तो क्लियर हो ना, इनकम बोलेंगे ना उसको।
अगर होगा तो इंटरिम होगा, आप सही कह रहे हैं, लेकिन आज की डेट में उसके बारे में कोई डिस्कशन नहीं हुआ है।
अच्छा अच्छा, ठीक है जी, थैंक यू।
Thank you. Before we take the next question, I'd like to remind all participants, if you wish to ask a question, please press star one on the touchtone telephone. Next question is from the line of Ronald Sioni from Sharekhan. Please go ahead.
Good evening, sir, and congratulations on a very good set of numbers, in terms of sales, and also there's been a net debt reduction, collections have been strong. So, sir, on the outlook for FY24, how do you see this year in terms of sales booking, and what kind of launches we should expect, in terms of top line potential or GDV, we can expect by FY24?
Ronald, so we don't give forward-looking guidance, but having said that, let me share with you some data points. Basically, we are looking at total of 15 million square foot of launches. In that 15 million square foot of launches, 3.6 is in Puravankata, 7.97 is in Provident, and 3.68 is in Purva land. These projects are pretty much on track in terms of the launch. So as mentioned in the ICP, we launched about 1 million square foot in the last quarter, and we saw that the numbers were pretty good. On ground, what we are seeing is there is good traction, and we are expecting that we will take more projects to the market starting this quarter. The work is on track as we speak. And we are quite optimistic for the continuous increase on quarter and year-on-year numbers. And if you see the trend in ICP, what is also mentioned is whatever we do in the first quarter, we normally do higher numbers in the second, third, fourth quarter. So I will leave you to estimate what our pre-sales numbers will be and the cash flows will be. But the trend is very, very optimistic and very positive.
15 million square foot, we should take it over the next 2 years, or for FY24 or something, 18 to 24, what kind of timeline you for 15 million square foot?
So you should assume that we will open only up to 6 million square foot, 6 to 7 million square foot in this year, and the balance inventory will be opened in the phased manner in next year and the year after.
Okay, great. And this quarter we have also seen net debt reduction. So, I have the management, balancing the view that we should also, reduce some portion of the debt going ahead, or this was one of where, you had paid off some debt. So is it a conscious decision that part of the cash flow should go towards debt reduction?
Look, as we have disclosed on slide 26 of the ICP, of the total debt, 2,267 crores of debt, or now 2,200, which is reduced by 64 crores in the last quarter, is self-liquidating in nature, right? What it means is basically on its own account, as we progress the project, it will naturally reduce. What will happen is our composition will change. We will continue to invest in our commercial project, wherein we'll draw down debt for construction to build those assets. And at the same time, new acquisition strategy is going to roll out. Our aim and goal will be that we will try and keep our debt at similar levels while the ongoing debt continues to reduce as we engage in the market and we deploy capital for new acquisition. Therefore, what I'm saying is, while we keep the absolute debt at similar levels, that's the intent, we will see technically more acquisitions happen. And second and most important thing is, and I keep saying this every call and every presentation, that please look at my debt per square foot number of area under development. And if that debt per square foot area under development continues to reduce, then the leverage is actually not something that should affect the business, because then what we are saying is against an average realization of 8,000 rupees a square foot, my cost of debt is say about 300 rupees. If my average tenure of debt is 3 years on 1,000 rupees a square foot, right? That is point number one. Point number two is that you look at our cash surplus. And if you look at slide, I'll tell you where we have showcased the total cash surplus of 11,200 crores, slide 28. You are talking about a 2,000 crore debt on a 11,200 crore surplus, which is only from projects which are ongoing and which are going to be launched. I think we are in a very, very comfortable position. And as we launch these projects, you will see the debt per square foot come down and our ability to scale. So our focus is really to expand and grow, and we will remain committed to growth.
Just on that follow-up, you said about business development. So the focus is, on, getting faster approach of turning the land from existing land bank, or you want to go for the, new acquisitions, or if you want to go, then what kind of model, outright, JV, JD?
So we are looking at both. First step has been for us to monetize what we have invested in the land bank, and therefore you are seeing this 15 million come to the plan being shared with you all, and it's unfolding as we speak in this financial year. As far as new acquisition is concerned, we are absolutely committed to it. We have a fairly balanced mix of business in terms of outright and JDA. We will look at the models. We are also looking at a lot of redevelopment projects in Mumbai, which is IT redevelopment projects. And of course, JDA and outright acquisitions across all the markets where we are present in. But the model is pretty much in a way where we look at about 30 to 35% of our business coming from the JDA business, and about 60 to 65%, maybe up to 70% of our business coming from projects where we would outright purchase and invest in, because the margins are much healthier and much better, and you get to see the appreciation of prices and appreciation of margins as you go along. So that's the balance we are looking at.
Last question on the Starwood, like what kind of contribution was there and what kind of margins were there by Starwood during the quarter, and also the related one, the order book has reduced. So, can you help, know why the order book reduced from 1,600 to 1,200 crores?
So, we are on the job. Last quarter, we added about 300 crores of order book.
We did add it. What happened is, see, this order book is a net order book. It's not a gross order book. That means the order book net less what we have billed during a quarter or a year, and hence this order book is net of delivering or billing. Billing. That's why it's reduced. Point number one. Point number two. This quarter, Starwood has done a turnover of about 103 crore and a negative PAT of 2.3 crore.
But having said that, I think what's important is that we are very, very actively pursuing new business. There are a lot of tenders in process. We will see the order book go up as we go along in the coming quarters. Focus is really on business development other than the existing operations. We have had some challenge in terms of the slowdown of turnover because of availability of labor supply, which is normally the case in this particular quarter, April, May, June, and hence normally the billing cycle reduces kind of in April, May, June, because as you may know, laborers go back to their harvesting season and the marriage season in the north. So having said that, I think they are pretty much back. We are full steam going ahead, and our business development activity is now moving at a good pace. We will see in next 2 quarters our order book increase.
Okay, sir. Thank you very much, and best of luck for going ahead, sir.
Thank you.
Thank you. The next question is from the line of Neeraj Mansinka from White Pine Investment. Please go ahead. So Neeraj Mansinka, you may please go ahead with your question. Your line is unmuted.
Yes, sorry, I was on the mute.
Thank you for the opportunity. Can you give me the trend of the walk-ins inquiries that have for the customers that have come in the last 1 or 2 quarters, and how do you see that going forward?
I mean, obviously the business is going up. That means there is a lot more site visits and lot more conversion that is happening on the ground. So we are seeing an increasing trend, including in our sustenance projects. That's what is very encouraging, because what's happening is that our ongoing projects, it's not just the new launches that are contributing, but the ongoing projects are seeing increasing traction, both in terms of site visits and conversions. And as we see that and we add the new launches to it, we are seeing the kind of numbers that we are seeing. I mean, this is the first time in our history of Puravankara that in the first quarter we have done a higher numbers than the Q4 of the previous year. So that shows that, you know, we have broken that glass ceiling that we were kind of under. And, you know, that's why the numbers look so phenomenally good also when you compare on a year-on-year basis. It's 119% growth. So the point I'm making is that both sustenance and new launches are doing quite well, and we are seeing increasing traction. And I think that's also a result of the feverish activity that is going on site in terms of construction and people's understanding and confidence in the quality of work that we do, and hence the premium also that we are commanding in the market. So overall, it's a good situation to be in for the brand.
No, I am aware of that. I saw the presentation, but still wanted to know on the inquiries and walk-ins. Can you give some statistical number or some thought process of how you see the walk-ins? Has it gone down or has it gone up? Yes, we understand it's gone up. I'm more trying to see on the current serious slowdown in the tech sector. So can you understand from that perspective?
So if you were to compare apple to apple, I would give that the number were obviously much higher. It was twice the number in both in terms of site visits, twice the number in terms of inquiries, and twice the number in terms of conversion, right? That percentage we pretty much follow. So if you were to, let me give you a number. If you were to look at our inquiries to allocations, our inquiries on every 100 inquiries, we have allocations of anywhere between 35 and 40%, which is 35 to 40. Of 35 to 40, about between 20 to 25 site visits. And out of that 25 site visits, you're looking at a conversion of anywhere between 3 to 4 conversions. So that's the kind of numbers that happen. When we do a 1126 crores, which is 120% higher, on the same statistics which we are maintaining right now, you will see twice the amount of inquiries and twice the amount of allocation, and therefore twice the amount of site visits, and hence double the number of conversions. And therefore, our confidence on the numbers. Only statistical difference I can possibly add to this is that our conversion has gone up by another maybe 15 to 20%. So when we were earlier getting 25 site visits, we were closing maybe 2.5 sales. Today that becomes between 3 and 4 sales. Are you with me?
Got it.
So that's the improvement that we have seen because of the brand and the focus on the construction.
And the question is on the current selling. What might be the EBITDA margin you might be booking, which you would obviously report much later?
So I think if you look at our plotted development, the EBITDA margins will be upwards of 35 to 40%. If you look at our Puravankara margins, you are looking at anywhere between 30 to 35%. If you are looking at a Provident margin, it will be anywhere between, I would say 26, 27%, going up to 30%.
Okay. Then how do you explain this current quarter EBITDA margins? Last 3 quarters, the margins have been not so supportive to what we've been seeing.
So margin is the result of 2 things, right? I think, Neeraj explained it in his opening remarks. Margins are on account of what you deliver, which gives you the revenue, and what you spend, which you can't capitalize. So what that means is, we have a certain number of units and certain value of units as possession. Some of our possession was In fact, the projects were ready, but were deferred because of OC or certain local technical issues where I could not do the handover. It will happen now in this quarter and the next quarter. So, the revenue booking will go up. Having said that, what has affected my margin really is my launches. So if you look at the sales number, and when you say we have doubled the sales, more than double the sales number, we were at 500 odd crores, we are at 1100 odd crores. What that means is that we have spent 15 crores more on marketing costs, which has hit us. That 15 crores alone, if you just adjust, that number almost takes care of the extra losses that we are talking about. Plus my GNA, which is also higher because GNA is spent basis what business we are doing today. It can't be capitalized. It can't go into my P&L. Between both of these things and my ability to get my revenue recognition because of handover, the margin is looking squeezed. But if you look at the project level and if you look at the way we look at our business, our margins are very much in line with the projections what I suggested, and you will see this unfold as you start doing the deliveries.
Okay, so the thing is in a different way. Next 2 quarters, do you see that margin going back to say 20% plus because of the one-offs that might have happened and you might have booked some cost in this quarter?
So as I said, we don't give guidance. Having said that, we will be doing more launches.
Real estate is not guidance, right? Because whatever booking you're doing, you're knowing the cost, you're knowing the revenue, so you will know everything. There's no forward-looking forecasting we are asking. We're just asking that, see, cost. The reason I'm asking is that the extra margins are not as much as you were just when you said about Sorted, Puravankata and Provident. The blended EBITDA margin comes out to 27, 28% on this average that I did. So obviously that margin should come in next 2-3 quarters, right? Ultimately, because
I think if you look at it over next 3 quarters to 4 quarters, you will see that margin come back for sure.
All we can say is, our couple of projects are coming for position in coming quarters. A large project by T Hills, there is a project in Chennai by Hibiscus. All are coming for position, and
Hyderabad is coming. Hyderabad
converts some of our 2 towers we are expecting to get position in few days. Another Provident project, Deora, we are expecting OC any time. These projects we are reaching to the completion will start giving handover, and that margin will come in the P&L. That is what we can, at this moment, I can give that kind of information.
So got it. So what you're saying is a lot of projects are closer to completion, so obviously those will reflect in better margins and launch likely.
Of course.
It will. As accounting norms, the moment I recognize revenue, it is from every unit which I recognize will come to the P&L, and thereby that will reflect in the margin and the profit for the quarter.
Got it. So the last question, the debt that you are talking about, 25-81 crores, you said it will remain about flattish over the next few quarters of 1 or 2 years. So why would you not want to repay the debt? And
as Abhishek mentioned in some other question, the point is that certain amount of leverage is beneficial for the business. As substantial part of our debt is backed by an ongoing project, and which will be repaid in a natural course. If you look at the next 12 months, I'll be naturally paying about 600 crore approximately as per scheduled repayment, right? And if you look at this quarter also, which we have given the slide, in the business side as it is reducing, and hence it will be debt management will be in that line. Besides this, more and more new launch we are going to take, that will reduce our debt per square feet as a business volume, and that will reflect in better utilization of capital, and that will in turn will add more value to the P&L as the volume of production goes up and debt per square feet comes down.
And I think our focus is, as I mentioned in the beginning of the call, is on acquisition and business development. For that, whatever is the capital requirement that we need, we will continue to draw down on that capital, and hence that's the reason why Neeraj is right. He's saying 500 to 600 crores you'll repay in natural course. I'm making 500 to 600 crores to add to my new acquisitions. And again, the whole point is that how much debt is relative to how much business you're doing. And I think that's the context that you need to put our debt in. And accordingly, you measure the debt. And you will see the numbers in this quarter, in the coming quarter, in the next quarter. And obviously, then we can have a conversation.
And besides that, we are also creating 2 big commercial assets for the company. And to that extent, we'll be drawing down debt and increasing the value of assets for the company.
So yeah, I think wonderful. I have just suggestions. One, can you in longer term show the debt as a commercial debt and residential debt so that we can understand what is a debt for development and what is a debt for long-term assets?
If you go to our investor presentation slide number 26, there we have given a breakup of the debt, how much debt is backed by residential business, how much debt is lying for our land equity.
Yeah, I saw that.
Yeah, and how much for the commercial business we have drawn down and raised out in 30th June.
Got it. Last suggestion is, you also should include the NCD and OCD debt, right, of 100 crores in the outstanding, because that is still a debt ultimately. So
that debt is kind of equity in nature. We have money from IFC against the project, which is payable and enable structure. Similarly, Puravankata Limited has launched our own AIF by Purva Excellence Fund. That fund has invested in 2 of our projects in the form of NCD, and that again a payable and enable structure. And hence, that we are showing separately. That is not essentially equity in nature. That's not essentially being paid and being as a manner or to a debt, like monthly servicing of interest or principal.
Okay. Thank you, and I think look forward for improvement, good improvement for next few quarters. Thank you very much.
Thank you.
Thank you. The next question is from the line of Sagar Ramachandani from MK Ventures. Please go ahead.
Hi, good evening. I have 2 questions. So one is...
I'm so sorry to interrupt, but the audio is not audible. Requesting you please speak a bit louder and use the handset mode while speaking.
Me now? Hello, can you hear me?
Yes.
Yeah, much better. Yeah.
So out of 15 million square feet launches that are planned in financial year 2024, how many are completed in the first quarter, and what are plans for the next quarter in terms of billion square feet?
So we've launched about 1 million square foot already, 770,000 square foot of plotted development and 240,000 square foot of a villa development. That is launched already. And in the coming quarters, starting this quarter, we are expecting additional launches. Yeah, we are expecting, in this quarter.
And second question being, what is the strategy on Pune and Mumbai, primarily development aspects of Mumbai, and where are we on that, and what is the revenue contribution from Fairmont and the Pune project?
So as we speak, we are actively pursuing opportunities of society redevelopment in Mumbai and actively pursuing opportunities for new land acquisition, both on outright and JDA basis in Mumbai and in Pune. Our intent is eventually that we will see of the total revenues over next few years, we will see 50% of our business will come from Mumbai and Pune. That's the target we are working towards. Today we are very, very heavily invested in the Bangalore market, and almost 60% of our business comes from the Bangalore market. And of course then we get it from Chennai, Kochi, these are the other markets that contribute. But this composition will change over time. Having said that, today the contribution of Mumbai and Pune is quite low, it's under 10%. But I think that will change with the new acquisitions and the new launches that we are looking at doing in the next 12 months.
All right. Thank you very much, and best of luck for the next quarter.
Thank you.
Thank you. Next question is from the line of Rishikesh Oza from Robo Capital. Please go ahead.
Hello. Yeah, hi. Thank you for the opportunity. So my first question is, what was the unit deliveries in Q1?
We delivered 467 units in Q1.
Okay. And what is our target for FY24 as well as FY25 deliveries?
So FY24, we are targeting about 3,000 units of delivery. That's the estimate we had given. And FY24, we can come back to you with an answer.
Okay. Okay. And also, sir, just wanted an idea of those 3,000 deliveries. How are the deliveries lined up? Like, which projects would they do mostly, and in which quarter can we see run rate to, really start?
So we will start seeing pickup of delivery starting from the end of this quarter, which is end of September quarter, going into December and the March quarter. And the project that we are talking about, I think Neeraj mentioned on the call a little while earlier. Tivoli Hills is a large plotted development which is over 1 million square foot. That is going to come up for delivery starting end of this quarter. Equinox, which is our Provident project. Hibiscus is another plotted development which will come up. Up Square, which is ongoing. There's another project called Promenade in Bangalore, which will come up. There's another project called Xenium, which will come up for delivery in the Jan quarter. There's another project in Chennai called Somerset, which will come closer to the end of the fourth quarter. These are all projects which are lined up for delivery. Yeah.
Okay. Okay. And also, sir, just wanted an idea. When we say there are some upfront costs that we have there due to new launches, what would they be as a % of revenues?
When you are asking that question, what do you mean? You mean pre-launch marketing expenses, or you mean land approvals and all of those?
So basically, the cost that we have to bid from the P&L, due to which you have said to the earlier participant that the margins, the reported EBITDA margins are ideally down because of those upfront costs that you have to take because of new launches.
So typically, you would see any pre-launch cost. There are two parts to that cost. There is a pre-launch cost, and there is cost of launch, and it depends on the scale and size of launch you typically do. But for whatever sales contribution you look at, you can easily assume about 1.5% to 2%. So, for example, if I was to look at a 1,100 crore sales, I would say that I would have spent about 15 to 20 crores in which I cannot capitalize, right? And of course, pre-launch costs, which I can't capitalize, will be to the tune of anywhere between 5 to 10 crores minimum. So that's the range that you're talking about. And you should take a number which I can't capitalize of every quarter's pre-sales, anywhere between 1.5 to 2% outer limits.
Okay. Okay. So we can say that around normally this level of EBITDA margins, and this should actually increase going forward, like you said to the earlier participant, because of the plotted development projects will become for deliveries in coming quarters, which have higher margins. So ideally Q2 onwards, the EBITDA margins, the reported basis EBITDA margins should increase.
So, yeah, correct. You're right. Between Q2 and Q3, it should start reflecting on the EBITDA margins. And it's not just the plotted development. I named quite a few of Puravankata and Provident developments, which are also coming into possession.
Okay. Okay, got it. Got it. Thank you.
Thank you.
Thank you. The next question is line of Puravankata from B&K Securities. Please go ahead.
Hello.
Hi, Anurag.
Yeah, sir. Congratulations on a good set of numbers. I wanted to know what kind of bandwidth do we have in terms of active projects at one time.
Thank you, Anurag, for the question. So as an organization, we have ability to. So we are present in about 8 cities, minusing Bangalore because we want to get out of that market. It's not a market we want to scale. With a clear focus on 5 cities, which is Bangalore, Hyderabad, Chennai, Mumbai, and Pune. And we have 7 lines of businesses. Let's focus on the top 4 lines of businesses, which is Puravankata, Provident, Purva Land, Commercial, and the Starworth, which is a contracting business. Now, if you were to look at the geography, for each of the brand in each of the geography at any point in time, your ability to launch is anywhere between 8 projects, which is 2 projects in a year under each of the category. Is 8 projects. So if I simply do a basic math, 8 projects into 5, 40 projects there, and if I take 4 into 4 in the rest of the projects, if I do only 1 launch in each category, you're talking about 16. You're talking about at least 56 to 60 launches in a year is what we are capable of in terms of the potential of business. The question is, how do we get to that potential of business? For that, we have set up a P&L structure where each of the businesses and each of the geographies have focused, dedicated teams that are working, and for the brands which are working, only focusing on execution and operations of the business. So I'm not sure if you've seen some of our past, about a year and a half back, we deployed a different organization, matrix organization structure, where we have brought in CXOs heading different regions and different businesses and different P&Ls, creating independent teams below them to empower them, authorize them, of course, make them accountable to deliver the results. So it's a completely performance-driven culture, and the systems and processes that we have implemented enable these teams to be able to deliver the kind of volumes we are looking at. So the bandwidth has already been created, and if you go and research the kind of talent that we've been able to attract in the marketplace, I think that's pretty much akin to the quality of the brand that we have and the vision that we have. So I think we will see this bandwidth display the results which you're already seeing in the last quarter. I mean, this is obviously exponential in nature. We will continue to see something like this unfolding as we go along.
All right, sir. Thank you so much. That is a very interesting number. Sir, the reason I asked this was because as per our last interaction, what I remember is that we are poised to keep our land bank between 50 and 45 million square feet. Plus, if we, add up the projects that we are, working on in the year financial year, I just wanted to get a feel of, how the cash would flow, because we are poised to keep our land bank, intact at a certain level. Plus, if we launch, additional projects, particularly in Puravankara, then how would, the business development look like for a year?
So, to answer that question, are you asking, let me ask you and understand what you're asking. Are you asking how much new land acquisition we will do? Is that the question?
Sir, the question is, as our business grows, in our bandwidth, how many new projects can we, execute simultaneously while acquiring new land?
So, as I mentioned earlier, these 15 projects are on the way. The teams respective teams are running these projects and they are getting launched. It is not one person, it's an organization that's been built. There are 1,300 people in the organization and there are different P&L heads who are driving their own businesses. That is one part of it. At the same time, for replacement, we are in a aggressive deal mode where we are evaluating proposals very diligently, profitable margins. Fortunately, consolidation is helping a brand like us to get the right kind of deals in the marketplace. And you will see announcements that will happen. Our endeavor will be to replace whatever it is that we sell within the same year, so that we have replacement of that inventory, what we have sold in the year. That's how we are at this point in time approaching it. And it will be, as I mentioned earlier, a mix of JDA and outright.
Okay, sir. Oh, thank you so much.
Thank you.
Thank you. This question is from the line of Harsh from RSPN Ventures. Please go ahead.
Yeah. My question is with regards to current project mix between luxury and affordable. And also, can you guide it with what is the mix of residential and commercial, and this change in future?
Sorry, what is the
current project mix between luxury and affordable?
Okay, so if you look at all the Puravankara projects, you can count them as luxury projects, which are shown, which is to the extent of 3.6 million square foot. Provident, which kind of mid-income projects, which is about 8 million square foot, and plotted, which is in Purva land, which is about 0.7 million, 3.68 million square foot.
This is about the launch timeline. But if you would like to know about breakup of ongoing projects, if you go to our slide number 31 in our presentation, there we have specifically mentioning which are the projects under Puravankara Limited, which are the projects under Provident Housing Limited, and which are our commercial projects.
Okay.
Project-wise, million square feet wise, all it is there.
Are you looking at only new launches, or are you looking at the breakup of existing as well?
No, both existing as well.
So if you look at existing sales, then you go to slide number 12, which talks about unit value-wise contribution to sales value. So if you see there, that gives you a breakup of how much units we are selling sub 1 crore and how much it is above 1 crore. So sub 1 crore, if you look at it, it's about 46% of our business, and 54% of our business is coming from above 1 crore category.
Okay. And my next question is with regards to the redevelopment projects. So since you are keen on taking redevelopment projects in Mumbai, what are the margins for redevelopment projects like right now going on? And how can we, I mean, are you in talks with anyone, or are you still looking to explore these projects?
So for redevelopment projects, our target margin will be similar in nature, which we discussed, which are the EBITDA margins, obviously, which we discussed earlier, specifically in Puravankara, because most of the redevelopment projects come under Puravankara. That is to answer on margins. And as far as actively pursuing, we are very, very actively pursuing multiple tenders and multiple society opportunities which are play out there. And we are shortlisted in a few, and we are negotiating and engaging part of the whole process. So we'll see as we go along, as we close some transactions. I'm sure you will hear about it.
It will happen in this FY24 or next FY?
No, definitely in this FY.
Okay. Okay. Thank you.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question for today. I would now like to hand the conference back to the management for closing comments.
Thank you very much for joining today's call. I hope me and my colleagues have been able to answer all your questions. And I'm wishing you all of you a very happy Independence Day. And thank you very much.
Thank you. On behalf of Axis Capital Limited, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.